Manufacturing company master budgets. Cost of goods sold budget. Master budget components for a manufacturing company. Today we're gonna do one of the operating budgets, which is cost of goods sold budget, and it depends on direct materials, direct labor, and manufacturing overhead. This is the balance sheet for 2018, so it's gonna be beginning for 2019. Okay, we're gonna need this one today. Finished goods inventory, the $55,000. It's 200 units multiplied by the cost per unit, which is $275 each. Now let's prepare cost of goods sold budget. Smart Touch Learning uses first in, first out, FIFO, inventory costing method. So the first I purchase is the first I sell. So we sell the oldest first. The production budget illustrates in Exhibit 22.6 shows that the company starts 2019 with 200 tablets and finished goods inventory, and the balance sheet shows the beginning finished goods inventory has a total cost of $55,000, which is $275 per tablet. So as I told you before, in the balance sheet you have finished goods inventory of $55,000, which is 200 tablets or 200 units multiplied by $275, and this is the cost per unit. Now, all other tablets sold in 2019 will assume the budgeted production cost of $294 per tablet as calculated here. Okay? How did he get the 294? He's gonna add direct materials to direct labor to manufacturing overhead. Now, direct materials cost per tablet was $150. If you go back to your direct materials budget, you're gonna read that it's $150 per tablet. For direct labor cost per tablet, it's gonna be $25 per hour, and he said that I need 3 hours to make one tablet. So we're gonna multiply $25 with 3 to get the 75. Now for the manufacturing overhead, I'm gonna multiply the rate that we calculated, which is 23 by 3 hours, because I need 3 direct labor hours to make one unit, so I'm gonna get 69. Now if we add them up, we're gonna get the product cost or the manufacturing cost per tablet, which is $294. Okay, so in 2018 the cost was lower, it was $275. Now it's $294. Okay, now let's go back to the sales budget. Okay, he said in the sales budget that the company projects sales of 500 tablets in the first quarter. Then he's gonna increase it by 50 in each quarter. Okay, so in quarter 1 he said that the number of units to be sold will be 500. In quarter 2 it's gonna be 550. In quarter 3 it's gonna be 600. In quarter 4 it's gonna be 650 tablets. Okay, now in quarter 1, since I'm using FIFO, I need to sell the oldest first. So I need to sell the 200 units from 2018. Okay, so I need to sell the 200 tablets from 2018, and the cost for them was $55,000 from the balance sheet, because as I mentioned before, it's 200 tablets multiplied by the cost per tablet, which is $275. In quarter 1, okay, budgeted sales in units was 500 tablets. Okay, so I took 200 from the balance in my balance sheet. Now I need 300 more because we said the total for quarter one it's 500 units. So 200 units was from 2018 and 300 units will be from 2019. So I need to multiply it with 294. So 300 multiplied by 294. While in quarter two it's gonna be 550 multiplied by 294. In quarter three it's gonna be 600 units multiplied by 294. In quarter four it's gonna be 650 tablets multiplied by 294. Now cost of goods sold will be beginning inventory plus number of tablets to be produced and sold multiplied by the cost, so it's gonna be the total for these two. Now we are done with the cost of goods sold budget. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.